Amazon plans to spend $200 million US. Now, not all of that is linked to AI, but a huge amount will be on data centers, chips, and other equipment. And that capex forecast, $50 billion higher than analysts had expected. We have seen some pressure on Amazon stock today. Let's get more from Lloyd Walmsley, Managing Director and Senior Equity Research Analyst at Mizuho Americas. Lloyd, thanks very much indeed for joining us. What was your reaction? I mean, is there a risk Amazon is overdoing it here?
No, thank you for having me. Look, I think certainly there's a risk everybody's overdoing it here. Yeah. But I think coming out of this quarter, we got a lot of what we've been wanting to see out of Amazon for much of the last year. We saw a market acceleration in growth at AWS, a 4 percentage point acceleration, which was nicely better than we had been hoping for. And then the backlog growth accelerated by 16 percentage points. So they are clearly in a better position for cloud related to AI than I think people were giving them credit for just a few months ago. So we feel like they are investing a lot. I mean, these numbers are eye-popping across the board, but we are seeing good signs that there is early ROI. I think it's not where it's historically been, but we think over time it can get there, and so it's a worthy investment for them to be making.
So you say that AWS is catching up in AI cloud. Have they, to some extent, fallen behind their big rivals?
Yeah, I think they had fallen behind. I mean, they were slow to get going on, whether that's building LLMs themselves, whether that's building out the infrastructure. So I think they were behind for a bit. They may well still be, a little bit behind some of their peers. I mean, Google has been building their own custom AI ASIC chip for 10 years now, versus AWS just the last few years on their Trainium chip. So they're behind, but making quick progress is what it looks like to us.
Because one number you highlight, AWS backlog growth of 44 billion, in Q4 really lagged Google's backlog growth north of 80 billion.
It did. And I mean, the print we saw out of Google was extraordinary.
Yes.
Their acceleration in cloud, as well as margin improvement, was stunning. And I think Google isn't really disclosing exactly what's going on, but I think they're benefiting from the move to outright sell their TPU chip. We don't know exactly how they're doing RevRec, but clearly what they've got in that chip is something special in terms of the cost performance of that chip and its competitive positioning. And so they're really taking advantage of that and benefiting from that. And AWS, they have an incredible semiconductor team there. They've had enormous success historically with their Graviton chip. But again, the Trainium chip is, they're just rolling out their 3rd generation. Google's in something like their 10th generation of TPU chip. So they are, they're taking advantage of that.
And they are, of course, they have so many strings to their bow. They are making lots of money from advertising as well through their retail platform.
That's right. I mean, advertising is one of the biggest beneficiaries of AI, and we see that across the space. I mean, Meta is an incredible example of that, with just a massive acceleration across both user engagement and the performance of ads. And Google is benefiting from that too. I don't think they benefit quite as much from Meta, just given the search business has historically been such a good business from an ad performance standpoint. There's not as much room to leverage AI, but on YouTube, they benefit tremendously. And so that is helping their core business. So yeah, Google's unique in that they're really benefiting on the application side with advertising, the infrastructure side with TPUs, and then they've got so much proprietary data to inform their models that they are really in a uniquely good position vis-a-vis AI.
Lloyd, thank you very much indeed for joining us. Lloyd Walmsley, Managing Director and Senior Equity Research Analyst at Mizuho, and the rating on that stock outperform with a price target of $315 US.